Playoffs? Don't talk about it. Playoffs? You kidding me? Playoffs?
You. Hold on, I'm just getting the music right here. All right. What's up? What's going on, guys? Happy Wednesday. Welcome to the stream. Welcome to Obe TA. Take a look at the charts. Try to find the mythical edge, right? So let's just get right into it, all right? Hope your day was going good. Let me know if the sound is off or anything like that. But other than that, we're good to go. Let's get right into it. So taking a look here to start off, as we always do, with Bitcoin. As of right now, we got about 28 minutes until the daily candle closes. And for the time being, it is looking like a bearish engulfing candle. Unless something changes in that amount of time. We can move it to the smaller time frames to take a look. We are essentially, my opinion here, in this little channel going on, but really 20,000 is kind of everything. We close below 20,000. I think it's another quick trip down to 17.6. All right, we can look left to see that that was a little peak back here from December 1st of 2020. So, or I'm sorry, a support here. This support right here. So that's already held once, now twice, right? So on the way back down, we can hope that that would hold as support if this does in fact break. Down at this level, you can see negative momentum is still trying to continue to fade, and yet price, once again, much like it did up here, is not really doing much, right? It's kind of just sideways, if not down a little bit, right? Giving us that bearish engulfing candle. It's kind of gross. All right, not really good. We had I know Jerome Powell was talking to Capitol Hill today, and he was basically up there saying how the economy's strong, and you know they got to get wages down to try and stop inflation, all that kind of stuff. So you know, whatever, right? If you ask the president and you ask the Federal Reserve chairman, they'll tell you everything is going great in the economy, but everybody else who actually pays for stuff would probably tell you something different. But ultimately, I think energy today had a bad day. Crypto is not doing great, as you can see. I did have some additional sell-offs aside from Bitcoin. But yeah, so let's move it in on a shorter time frame here. We'll move it to the 4-hour. Again, on that daily, really don't want that thing to close below 20,000. All right, at this point, not only is it a historical support level horizontally, but it is also just a psychological number because of that peak back from 2018. So that's just the number, man. And close below it, consumer confidence in this asset will likely fall along with the price. All right, but looking at the 4-hour, we can see some structures going on here again. We're kind of right in the middle of this range between 23,000 and that support down at 17.6. So, I mean, we could just stay here for a while, right? There's no telling what this thing could do in the meantime. We can just see what level it's currently at, which is 20,000. If you can stay above it, then you probably come up to test this trend line that we've got going on here. 1, 2, 3 touches. Right, maybe on the 4th we break. If we do break the trend line, then I think we head back up to test that 23,000 level again. And who knows from there, right? It could sell off. But that trend line is the first area of resistance that I would be looking for, at least in the 4-hour time frame. If we could break it, not only will we, you know, break a trend line, but we'll confirm this kind of inverse head and shoulders pattern. Okay, which will give us a chance to get back up really to the top of this range of 23,000. All right, at that point though, even then, we're throwing Fibonacci's around. Throw this here. right? Even if we got all the way back up to 25,000, right? You're right in the golden zone here between the 618 and the 50% retrace, which is a very common area for assets to reverse, especially in the trends that they've, been in over the last few months, which is obviously a bearish trend. So as assets get into the golden zones of bear trends, they'll often reverse. It's more reliable to reverse there. 25 also being a psychological number at this point. That's like best case scenario if we can even get above this trend line, right? We might literally just fail here and fall back down to retest 17,000, at which point you'll be looking to looking for signs to maybe take a position. Hold on a sec, I'm just checking to make sure this is still cool. So that sounded terrible. Hold on, let me make sure this is still live. One sec. Connection seems to be a little bit shaky. Sorry guys, one sec. All right, I think we're good. Yeah, all right. Sorry, guys, the connection's been a little bit off. I think that's what was going on with the music in the beginning as well. Shit. Computer's still acting up, but I think we're good. I think we're back. So let's continue it here. Yeah, we got a potential inverse head and shoulders setting up here. Trying to hold 20,000 again. That left shoulder back here from June 15th, right? So if we can get this thing going and we want to take like a measured move, something like this on the breakout of this trend line, gets us right up to that 50% retrace, right around 25,000. Right now, this doesn't mean it's going to get there if this breaks. It's just, this is kind of what like Thomas Bulkowski talks about as far as measured move of structures. That's what I'm seeing here with this inverse head and shoulder, if it does in fact break. That's just something to make you feel a little bit better about it potentially getting back to 25,000. But then if it gets there, I mean, that's really strong reversal area resistance. So if you're looking to take an entry on Bitcoin, you could technically do it now at 20,000. Just keep a really tight stop loss, maybe at like 19.3, something like that. Risking about 3%. You're doing it premature because it could come up and just hit this trend line and fail. But you could definitely mitigate risk here by keeping a tight stop loss below 20,000, knowing that 20,000 is definitely a support, and that if it gets broken, that we likely head to that 17. So if you get stopped out, lose 3%, whatever, try again down at 17 maybe if you want to do that. All right. So yeah, but need a little more time for this to get back up there. But again, man, if it doesn't hold, it looks like it's already kind of selling off here. Again, that daily was painting a bearish engulfing candle. It's anybody's guess, man. All right, even if we move it to the hourly here, it's like we had hidden bullish divergence, didn't really do much, kind of painted almost a regular head and shoulders on the hourly. But now we are developing some class A bullish divergence on this low. So it's just choppy, man. It's back and forth. I don't know. You're below the 200 moving average on that hourly time frame again. So it's just, again, you can mitigate your risk because you're at 20 and just put it pretty tight at like 19.4 and try to target that 382 maybe, right? That is an equitable trade. Even if you just go up to the top here, it's 2.5 to 1. All right, 8% for 3 if you're feeling desperate, like you have to do a trade. Sure, man, whatever. Okay. But that is Bitcoin. All right, let's take a look at Ethereum. All right, so for Ethereum, we can see the bullish engulfing candle that happened, what about June 19th? About June 19th of 2022, the follow-through price action has been terrible. Technically, as long as you stay above $998, let's call it 1,000, you will be, or the bullish engulfing candle is still technically valid and playing out. Once the price closes below that, you're probably heading down to about 848. All right. Again, psychological with Ethereum is 1,000. Really don't want to be below that. The damage has kind of been done with Ethereum though. Like, Bitcoin's top back in 2018 was right here. All right, and we're here now. So we've already taken out some of the highs. You're approaching $1,000, which has this little peak back here. Maybe that acts as a support. Could. If not, then you're heading down to 848, which is this peak back here from May of 2018. All right, and we could maybe even try, let me see, I want to see where the fibs are in this extension. Yeah, I mean, dude, you're past the 168 from the low in March. I mean, really, the only low that makes sense is to do, like, to move it to the weekly. And to look at it like this. See how you're just below? Like, the major supports below the 200-week moving average at this point. With 848 being the only real inflection point that I can see on here. So really, I mean, you fall below this, we could throw from, is this the COVID low? Is that August, March? We could throw it from here up to the top. All right, that 848, what's significant about that? It is at the 886 of the low before we had this major run. So we probably also have a harmonic down there. All right, so throw it here. Yeah, right around the 618, 113, down to the 886. All right, so a pretty, and the 1272. I mean, this is a pretty textbook bullish shark. So, I mean, 848 makes a lot more sense than just sitting where we currently are, below any kind of support or anything, and maybe we get a pullback in the meantime. But I think eventually we come down to the pattern completion zone of this shark around 848, and then from there, that could be the dream entry as far as getting some kind of confirmation of it as support, right? And then on the first low, we're eyeing it up, comes down to second low. That's really when this thing could start getting back into its another trend. Okay. So that's definitely an important level to look for. And that shark and the Fibonacci's and everything like that just make it that much more significant. Okay. But let me move back to the daily real quick. Some Class A bullish divergence on the MACD, but not on the RSI. So it's kind of like, it's just not as strong, right? Technically, yes, there's some divergence, but I like to see it on the RSI as well. It just makes for a stronger argument that this is like a real reversal bottom. Usually with this kind of stuff, it'll do its little pullbacks to 50% retraces or resistances before coming back down. At this point, it's not even doing that. And look at the daily. It's a pretty solid red candle after some indecision / shooting star, maybe, if you want to call it that. That's just not good, man. That's not good. That definitely looks like $1,000 is in jeopardy. But it could also be in the same position as Bitcoin as far as just kind of being in a range. Right, something like this. Honestly, I would pull this up to $1,000. All right, you really don't want to fall below 1,000. So this would be the range, in my opinion. Below 1,000, I think we're heading down to that 848, 886, and then that could be a potentially interesting area. All right, maybe we get that slightly lower low down there, and then get maybe a slightly higher low on that RSI, so we can get the Class A bullish divergence on the RSI as well as the MACD. Does that make sense? The shark. Okay. Let me zoom in a little more. Take a look at the 4 hour. Okay, could be forming something similar to Bitcoin with an inverse head and shoulders type of structure going on here. Okay. Again, 1,000 is going to be everything for this asset. So It hasn't developed it yet, so I'm not sitting here saying that there's an inverse head and shoulders, right? There's just the potential, right? The structure is kind of premature, but it's showing it's got the first 2 steps done. So with a break of, let's see right here, if we can break about 1800 on this thing, I'm sorry, about 1200 on this. All right, then we get some more upside. Then we can start to take a look at this high on the daily here to try and maybe get some Fibonacci targets, maybe the 382. I mean, that 382, yeah, puts you right at 1300, which is just the support back from March, which could now act as resistance. I mean, that's a major inflection point. So see how dramatic this is, right? So that little wick down here at 1300 is going to act as resistance on the way up. All right, and it already acted as resistance once back here June 15th. So there's just not a ton of upside, man. It's like I'm not super interested in trying to play these reaction lows without divergence or anything, because in my opinion, best case scenario, or what is more likely to happen, even if you do break this, that you just head up in here and then sell off back down to that 886, which makes a lot more sense given what the higher time frames are showing. You know what I mean? Does that make sense?
Right.
Okay, so I'm waiting for the divergence on the RSI at a low or same low, something, man. This kind of stuff, though, to try and take like a real swing trade on, your chances are just not great as far as like catching it doing something like this, right? Which is where you want to really get your gains. With this kind of trade, yeah, maybe you've got 16% upside before you get to that top, maybe 18. Okay, sure. But on the flip side, if it were to break 1,000 here and head down to 17, it's like 17% downside. So it's just like a 1-to-1 trade, right? Coin flip shot of going in either direction, which is just not, you're not trading with an edge at that point. You're just kind of, again, 50-50 chance. And it could go in your direction and you could make money, but you're not increasing your odds by trading like that. So I don't do it. I trade with increased odds when I can. Okay. What's next? Moving along. Take a look at the total real quick. Not a lot going on here. If anybody is in here, say what's up. This is an interactive stream. If you want me to take a look at something, throw in the chat, man. It's all free. I'll be happy to do some analysis on it for you. All right, but looking at total market cap, bearish engulfing candle, not super surprising. Again, 768 billion looks to be the level that this is, you know, probably going to go to, especially with a candle like this. And we close in about 10 minutes. So unless something happens, and we can move it to the 4-hour just to get a gauge on the total market and maybe what it's doing. It looks very similar to Bitcoin. Okay, which at the same time too, like we go like this, we got the high and then the lower high in price with the higher high going on the oscillator, right? So I mean, that's hidden bearish divergence and it's already starting to develop. So continuation on the 4-hour down is implied. And yeah, I mean, we could throw a Fibonacci on this. Maybe it continues down to the golden zone, I don't know, 830, but I don't know why it would stop there. And the reason is that if we move it to the daily, right, looking left, it's like, where is the support? Maybe this one from January 27, 2021. Okay, like 854. That lines up with a 50% retrace from the most recent low to where we are now, if that is indeed a high. But it makes more sense, especially with a bearish engulfing like this, to head back down towards 768 billion. Okay, especially on that smaller time frame, showing that hidden bearish divergence, stuff like that. All right, it's just lower high again after getting some class A bullish divergence on both oscillators. So it's like you got it here, and it's like you finally got it on the RSI as well, with the lower low in price. And again, this has the chance to turn into an inverse head and shoulders, but It's definitely not there yet until this neckline gets broken right around $912 billion. So break that, confirm the inverse head and shoulders. I'm much more interested in taking it on the breakout there than I am right now showing and developing hidden bearish divergence, especially after you got that class A on both oscillators. You got class A on both oscillators, and then it ended up making a lower high, right? That's not bullish, is it? So what would be bullish if we come down, you literally just start pivoting here, and with a bearish engulfing on the daily, I don't really know why it would, but break that trend line, then go for it, right? If you want to take a short trade on it, not a short, like literally a short position, but just like a quick kind of in and out. And then I don't even know. You maybe go for the 200 moving average on the 4 hour, something like that. If you just want to go for like a 3-to-1 ratio, you could pull it back about 11%, puts you right up around 1 trillion. Okay, psychological $1 trillion. I'd probably put it like right here actually. So it would be something like this, 2.67 to 1. That's a quick little flip. Okay, you want to go for that. Cool. But I wouldn't take it till it breaks. That's pretty much it. All right, or I wouldn't trade the market, right? You can't trade this specifically, obviously, but the crypto market in general. If you've got something that you're interested in, some kind of alt or something to try and look for a little better performance, maybe wait for this to break out, which ipso facto usually means that the other coins have broken out already. But you get what I'm saying. All right, let's take a look at Solana. Again, interactive stream. If anybody's in here, say what's up, say hello. If you want me to take a look at something, do some analysis, man, it's all free. Just throw it in the chat. Otherwise, I'm going to make this one quick. So this might be the last one if we're not really getting any engagement or anything. If this isn't total dog, you know what? Do me a favor, hit the like and the sub. I'd appreciate it. Get some more eyes on this thing. Make it a little more exciting with a little more engagement, perhaps, right? Cool. You know what I'm saying?
It'd be a lot cooler if you did.
All right. So looking at Solana, what is Solana doing here? Let's see. Looks like hidden bearish divergence to me. Okay, I see that little red island right here. Thought it could hide in the forest, but I see it, so that technically counts, right? And then if we move it to the RSI, we do in fact have Class A bullish divergence on the daily time frame on both oscillators. And what are we getting? All right, we got little upper wick, bearish engulfing candle forming on the day in 6 minutes, which would develop, if it were to reverse here, given that candle, would certainly develop some hidden bearish divergence. All right, highs on both oscillators, higher highs with obviously lower highs. This thing has just been making pretty much only lower highs since May 15th, so pretty terrible. And again, right, come down to $22. Why stop here, right? Why stop here when we all know you're going to $22? Like we just know it. It makes no sense to be pivoting here. Okay, so come down to $22. The water's fine, right? We'll see you there. Let me see. I don't know, maybe there's some kind of massive harmonic here or something like that. $886 at. It's right around here somewhere. Meh. You know what I'm saying. Okay. If this continues and this closes, we're probably heading back down. On the 4 hour, we had this nice little bearish Gartley. Where's it at? Hold on. There it is.
Perfect.
Okay, and it's reacting there. So bearish engulfing candle at the pattern completion zone of a bearish Gartley. Okay, showing, what's it showing? Is it showing? Not showing any kind of bearish divergence there, really, but still, man, that's not great. This isn't necessarily where you want to be trading. If it can start to pivot and develop some, but again, even there, it would only be on the MACD. Any kind of hidden bullish divergence on the 4-hour time frame. And that daily looks terrible. Even on the hourly, we're getting a bearish engulfing candle, closing in 4 minutes. Probably going to come back down to, at least in the very short term, 32 bucks to hit this 200 moving average. And again, like a lot of other stuff, painting a head and shoulders. All right, and they're pretty perfect. It's a pretty perfect head and shoulders. And the neckline is right about here. Right here. All right, so you break 33.81. And if we want to throw a measured move on this thing, $28. Right, in the short term. So, look, dude. Head and shoulders and downtrends at bearish Gartleys and it just I'm not buying this, right? I'm not buying this here. I'll let it come back down and get to a level that makes much more sense. Looking left at supports at 22, 21, 50. All right, guys, that's gonna do it. All right, if we're not gonna have any interaction or anything in here, I'm not. That's pretty much all I wanted to cover in that regard. So, guys, anybody that wasn't here, anybody that's watching now, appreciate it. Do me a favor, hit the like button, the sub, all that good stuff. Jump in the Discord, all right? The link's in the chat there. And yeah, man, I'll see you next time. Maybe tomorrow, maybe the next day. We'll see. I got kind of a busy week coming up. But yeah, until then, I'll be in the Discord. So make sure to jump in there if you've got any questions, want to take a look at anything. I'd be happy to engage with you there. But until then, keep it real, keep it chill, keep it. Keep it. Let's see. Keep it. Let's just keep it neat. How about that? All right. But more important than any of that, as always, keep it technical. All right, boys.
Du och jag ger varandra blickar som bjuder upp till dans.